Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Good evening, everybody. Welcome to today's recap and next day analysis. Now, we do have a little bit to go over, so let's go ahead and jump right into it. And before we even jump into the charts or anything, let's just talk about the data sets we got today and the earnings. So we had the PPI, the producer price index, which came in very cool, and we did have that anticipation because the CPI overall came in cool. I know some said that the CPI came in basically neutral, but I kind of disagree with that. Last report, not this week's report, but the one in July was super, super, super cold. Okay, that was like a freezing type of report in terms of the overall temperature gauge, if you were to gauge it in temperature, right? Um, but if you were to compare this report with the one in June, this would have been a much cooler reading. So that's why I say this CPI came in cool, even though um, it may not have been the most cool report ever. And it did come in cooler than the forecasters' expectations. A lot of the expectations did have it at zero point 0.3. The figures came in at zero point 0.2. So for me, that shows a cooler reading than what people expected. Now, going into today's PPI, we had a very, very cool report. It wasn't negative, but it was very, very cool. So this is starting to show a trend, okay? Even though the trend's a little choppy right now, this is starting to show a trend that the consumer prices and producer prices are starting to come down. Okay, they're starting to see weakness, and what that weakness really means is that consumers are starting to weaken. Okay, um, so there's that, and because of that, and we did talk about this, that even though the CPI report itself didn't see a massive boost in terms of the overall equity jump, like we saw today, it did create a culmination between the two, the CPI and the PPI, where we did see that jump today. And that was very likely people were just waiting to see the PPI report rather than just jumping the gun on the CPI report. Okay. Um, Now in the after hours today, we had the Applied Materials earnings, the AMAT earnings. Very, very, very big semiconductor company. Um, it's kind of like the European version of TSMC. Very big. Um, the earnings were great. They just increased their capex spending again. So kind of like TSMC, because they had an increase in their capex, they're doing pretty poorly in the after hours. Kind of makes a good dip buying opportunity. But I haven't checked the charts on that. But anyway, let's go ahead and jump into the technical analysis and what happened today. So on the daily time frame, we see our 5-day moving average, the 5 mile, at the 773.44. And we have the upper Bollinger at the 785.99. Now, for the high and the low today, we had a low of the 774.11, so it did not hit that 5 mile range, even though it hit kind of the upper bounds of it. And the high range was the 779.37, which was, again, a all-time high, and that was not the upper Bollinger. But what we do see on the 1 hour chart, and let's go ahead and turn off our indicators here. And we're going to pull up the drawing. It's going to be a mess for a second, but just bear with me here. We're going to change this to a support now because we finally created a support here. Now, we talked about in yesterday's video how potentially this can become a cup and a handle. And that's exactly what happened. It became a cup and a handle. And what that also created was this very large cup. Now, what happens when you close a very large cup, or any cup usually? You generally see some downside. Kind of like here, saw a little bit of downside as we built the handle. And now that we are above the cup, we could start seeing a little bit of downside here as we build the handle. Now, I don't expect a whole lot of downside at this point because we did break this consolidation channel. I'm going to keep it up just because I think it still might be relevant. Um, but we did break from that channel, and because we broke from that channel, we did go ahead and extend the buying channel. So the buying channel, looking at the 4-hour time frame, looks a lot more, has a lot more depth to it. We could probably even extend the top slightly, but we're not going to just yet. Now, with that said, the expectation from this point really should be to head downwards slightly, pull to the bottom of that channel, and of course this is probably going to extend the channel again. Pull down to that channel, and then from there we can start heading upward. Now it really depends on how deep the dealers want this handle on this cup. Again, this handle can go fairly deep here. We have a range of basically $10 that we can extend to. I would expect a little lower to the 770 at the very maximum. Finding one of these supports in here and then bouncing upward. But that's kind of the expectation, is to build a handle off this cup. Now, we can build a very small handle here. And this is something that I think we need to be aware of, is that we can kind of form this cup where we don't extend the channel, and that come tomorrow, we basically get a gap up and a continued push into the 780. Okay, I think that's very reasonable at this point, especially with all of the, cooler data this week. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. And even with the Applied Materials earnings being in the red currently, the earnings were very good. So I do think we're going to be seeing some more money flowing into the overall SPY, into SOX, into QQQ, even if they're down currently. Okay, so that's really what I'm looking for. And for some of our supports here, let's go ahead and just mark some of these ranges out really quick. So our resistance we need to really focus on here is at 779.37. Let's go ahead and edit that, the 37. And then for our support, we're just going to go ahead and mark some of these ranges. So we have that 775.38. And then there's about that 771.52. Now I am still keeping this 774.99 even though it doesn't apply as much. However, resistances usually turn into supports, and because of that, for now we're going to keep that marked, okay? Because even with today's price action, we pulled very close to that range and then started pushing upward. So we're going to focus on that. So the downside at this point would be focusing on some of these supports. Now, on the daily time frame, we're not going to swap over, but the 5-day moving average should be around that 774 area. Okay, so it won't be pulling up too much, but it will be pulling up slightly. And because of that, that can be a range that the market is going to be looking for as well. Now, if we do have a continued push from this range and we basically have a massive rally tomorrow, then our upper Bollinger is at this 785. Okay. And because of that, we have to consider that potentially we could push back up into this range. And if we're going to push in that range, that means we should be closing above the 786 range, 787. Might seem like a stretch at this point, but with all the good data out of the way, that's kind of really available at this point. Now, one thing we do have to pay attention for Today or tomorrow, whenever you're listening to this, is the Michigan consumer and inflation data. Now, I don't think that's really going to matter too much as the CPI and PPI came in very cool this week. Those kind of triumph over anything else. So I'm not too worried about those data sets. But in the short run, outside of this handle needing to be built on this cup, um, we should be seeing some upward trajectory at this point. Okay, and yes, we have been seeing a lot of upward trajectory. That's very apparent. Now, the last thing we're going to go to really quick is the CME, just to show you how large the expectations have shifted. And just taking a look at the CME here, we are currently, and this is for September's FOMC meeting. We have now pushed up to the 65% chance of a pause slash a hold in the monetary policy slash interest rates, um, compared to just about a week ago being at 45%. This is massive. Okay, this is going to be pushing a ton of weight into the equities. This should be heavily pulling the dollar down. This should be heavily pulling the yields down. By the yields, I mean treasury yields, which really opens up a lot of room into equity growth. Okay, because the dollar has to go somewhere. People are not in a position right now to really hold dollar positions. Generally, that's not what you want to do when the dollar's on a downtrend, because you have to think about it like this. If you're an investor and you're holding dollars and you're a forex trader, whatever, um, if the dollar's on the downtrend, how are you going to gain growth from it? Well, you push it into the equity market. So this is exactly what this is telling us currently. Even though my expectations over the next 2 months might be overall bearishness, that doesn't mean we're going to be seeing that bearish price action. Okay, this is telling us a very big story here, everybody, and we need to really pay attention to it, especially if we look into December. I know there's a meeting in October, but looking into December, 1 week ago, we had a 15% chance of the rates being held slash a pause. Now it's almost, almost 35%. It's at 34.1%, but this will be shifting upward. Um, and the odds of the two hikes is heavily pulling downward. It was basically at a 34% chance, with the odds of just a single hike being at a 41%. Now that's down to 18.9% with the one hike being at 44.5%. So this is shifting massively, and investors are definitely going to be paying attention to this. And this is exactly the type of price action, or the um I don't know why I said price action. This is exactly the type of thing you're looking for upward price action in the equities. That's what I was trying to say here. So this is something we were seeing back, what was it, October 2024, something like that, when the Fed made some statements where we were starting to end that hike cycle. And I know we ended the hike cycle in 2023, but we were sitting at just pausing almost indefinitely. Um, we started to see expectations shift like this, where we started to see the cuts starting to get priced in, compared to just pauses or, potentially the hikes. We're starting to see that shift begin to happen again. Now, we're not seeing cuts currently, and my expectations for the basically the rest of the year are just going to be pauses throughout the rest of the year. Um, However, this is what you're starting to look for the market to start getting those rate cuts priced in. And this is the type of thing we're looking for to see rate cuts into 2027. Okay, so I just want to end the video on that. Um, we know our price targets for tomorrow. Let's go ahead and swap back to that chart real quick just to very quickly go over it. Again, upward price target, that's 779.37. And from there, it's the upper Bollinger. Okay. We also have the bottom of this channel, which this does align very closely with that 779.37. But if we do head downward and start creating a handle for this very large cup here, just start targeting some of these supports. So the 775.38, 774.99, the 771.52, and the 770.20. All right. So with that said, going to end the video here. Thanks so much for watching. I appreciate each and every one of you. I hope you have a great trading day tomorrow and a overall great weekend. So I will talk to you all on Monday. Take care, everybody. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.